What's popping YouTube? It's been a while. It's been a while since I last posted here on YouTube. It's actually really been a while. But this is 2025. We are back on that. No excuses at all. So I took a trade on USD CHF that gave us a win of a 1:3 risk to reward ratio. So what I'm going to do is I'm going to get straight into the video and show you guys a chart breakdown on how I got to find that entry on USD CHF. It was actually a buy, and then I hope you learn one or two things that you can actually add into your trading to level up, because this 2025 all you have to do is stay locked in, stay focused, and do things that are going to improve your trading on the chart. You don't need to keep wasting your time on things that do not actually work on the chart. So make sure to subscribe, like the video, and also turn on your bell notifications, because I'm going to try as much as possible to drop more videos back to back on this channel. And yeah, I hope you benefit from this video from this chart breakdown that I'm about to get into. And please also share to others who might want to learn one or two things from trading. So without any waste of time, let's get into the video. So this is the trade I took on USD CHF, and as you can see here, it gave us a 1:3 risk to reward ratio. We risked about 30 pips and we went for 105 pips. So what I'm going to do is I'll clear my chart and walk you guys through on how I was able to spot this beautiful buy here that gave us this beautiful profit. So like I always do, I start off my analysis from the weekly time frame. So I'm going to head on to the weekly time frame to show you guys how I was able to do this. So on the weekly time frame, what I basically do is I'm going to wipe out every analysis on my chart and then start all over for you guys to see how I was able to do that. So all my chart is clean now. So looking at these charts, what I basically do, or what I did, was actually to look at the overall trend of USD CHF. I saw that okay, the market was in a downtrend. Like you can see, if I should zoom out, the market was most recently here, the market was on a downtrend. The market was actually pushing down. So after I've spotted that, what I then do next is to come and look at what the market is doing most recently, because you only want to follow recent price on the chart. You don't want to bother yourself with what has happened maybe 2-3 years ago. You want to focus on what's happening currently on the chart. So what I basically do first is to mark out the candle that closed before, or that closed last week. So I saw that last week candle was pretty much bullish at this point here. I saw that the last week candle was pretty much bullish. And then what I also then looked at is the external structures that we had. So I saw that we had an external structure here with a resistance level right there, and then I'm marking out my external structures, both support and resistance. So this is actually resistance here, because when price got here, it felt, price got here again and sold off, and then when price got into this support level, it went up. It's reversed into an uptrend most recently. So that's basically what I'm looking at. Then going back to that candle that I spotted that closed last week, I can now clearly see that okay, last week closed pretty much bullish, and the market bought from a strong support level. So there is every possibility that this market is going to go back to this resistance level and fulfill this structure, because there is a thing that when the market fails to break a structure support, it goes back to the resistance of that structure. So we'll have a support level here, and the market failed to break the support level here. So where else is the market going to go back to? It's going to go back to that resistance structure. So after I spotted this, I now look at what the market is doing most recently based on price action. So I can clearly see that previously the market was on a downtrend. It was making lower lows and lower highs. If I should use this, market made a lower high, because this high is lower than this previous high. The market made a lower low, made a lower high. This low is lower than this previous low, that's why it's a lower low. The market made a lower high that is lower than this previous high, and then made a lower low that is lower than this previous low, and then a lower high that is lower than this previous high. Now, what actually gave me that conviction or that confidence that the market was going to continue all the way to the upside is because we had a change of character here. The market broke a high in a downtrend that is not supposed to break, and then after that the market came back to retest that structure high, and now it's pushing up. So I can also see again that the market started breaking structures to the upside. So we had a break of structure here to the upside. We had a break of structure here to the upside. So when the market broke this high, let me align this properly. When the market broke this high, it closed above the high, which suggested that we could still see USD CHF or price pushing into this resistance level of 0.92242 at this particular price level here. So that was what I basically saw. And then after that, I went down to the daily time frame, because now I've gotten the direction that this market is in an uptrend, it's pushing up. So all I'm going to basically, like most recently, the market is pushing up, so all I'm going to be looking for is buying opportunities to take or follow price all the way to this resistance level. Although the overall trend is telling us that the market is in a downtrend, if you remember when we started on the weekly time frame, but most recently, that's why I said you need to look at what the market is doing most recently. But most recently, we can see that the market is in an uptrend, so we are going to be following that direction of the market. So that was what I basically saw. I saw that, okay, we had a change of direction here after this market took out this high, came back to retest it and started pushing up. So I started delving more on what was happening most recently. Then I also saw that after a break of this structure, we had a retracement, and then another break of structure also occurred here. So all these things are, the stars are aligning for me to see that, okay, this market is in an uptrend. Then after that, we had another break of structure and followed by a retracement. So I knew that after every break of structure followed by a retracement, there is going to be another continuation. So I was interested to catch this continuation move to the upside. What I mean is that after the market does something like this, it has a retracement, and then we'll have a break of structure. After a retracement, there is always another push to the upside. So I was interested to catch this leg of the movement to the upside, which was exactly what happened there. I had a break of structure, a retracement, then I was interested to look for that buy to the upside. So what I then did was to, this called a top-down analysis. What I did was to go to the 4-hour time frame. So here on the 4-hour time frame, let me take the market to exactly where I saw it. I think that was on Wednesday. Yeah, so this was where I saw the market. So on the 4-hour time frame, I started looking at what the market was doing most recently too. I saw that the market we had another break of structure at this point, followed by a retracement, then followed by another break of structure again. So I'm going to align this here, followed by another break of structure at this point. Now, looking at this market, I knew that after this break of structure, there was going to be a retracement and then to continue up. So I saw an imbalance here, a price imbalance. So an imbalance is basically when there is a gap between two. After an impulse candle, the market does not come back to fill this particular candle here. You see, I will have an indecision candle followed by an impulsive candle that took out that high. So there is a gap. After this candle closed, another candle opened bullishly, leaving a gap between this candle and this other bearish candle here. So there was an imbalance gap. Then I knew that, I think this was here actually when I saw it. So I knew that there was going to be a retracement to come and fill this gap. But then looking at it also, I saw that there's a demand level here and also a demand level here. So I knew that this whole area was going to be my points of interest to look for a buying opportunity to go to the upside. So that's why I took this last low that we have here out. I marked it out, and then I was paying attention to see how the market reacts here, so that you can take that buy to the upside. And then I also was looking to take the buy. I was looking to take the buy all the way to the upside right here. Sorry for the break, a call came in. So targeting back to this high, so I was interested to look for a buy from this level, and then I was going to aim for this high right here. So that was my analysis at this point. So after that, what I did was to go to the 1 hour time frame to look for an entry opportunity to catch that buy or take that buy to the upside. So on the 1 hour time frame, when I came to the 1 hour time frame, all these things happened there gave me that clue that after a break of this high, after a break of this particular high, there was going to be, a retracement. After market breaks a high, the market usually retraces to continue up, just like what the market did here. Just like what the market did at this point. Just like what the market did at this point. You see, we had a break of structure here. The market broke, came back to retrace. So if we actually found an entry from this demand level that we have here, we know that we are going to look for that buy back to that high. So that was exactly how I played this trade here. After a break of structure at this point, we saw that imbalance that was spotted on the 4 hour time frame. The imbalance was also visible here on the 1 hour time frame. The imbalance was also visible because I had a price gap at this point, but then I was just interested at these lows because that's where I know that, okay, when there is an imbalance, I'll have a demand, settling below those imbalance. The market usually comes back to fill those demand level for us to look for that buying opportunity to the upside. So when the market finally came into that level, I didn't kind of take my entry at this point because I wasn't on the chart when this happened, because I would have taken my entry at this point after this morning star candlestick pattern formed here. But then I was back on the chart on Tuesday 6 in the morning. I was looking at the market. I saw how this market formed another morning star candlestick pattern here. I will do a different video on candlestick patterns, but bear with me on this one. So I saw this morning star that formed, that is 1 2 3 candlestick pattern. Then on this retracement, that was on this retracement of this particular bearish candle, that was where I went ahead and I placed my entry somewhere here. Then I was risking 30 pips. The reason why I did 30 pips was because I wanted my stops to be below this particular low here, because the market could actually come back to tap this low before finally pushing up. So that's why I kept my my stop loss of 30 pips that went below this low. Let me arrange this to 30 pips. You see exactly this number here, 30 pips. And then I was targeting this particular high, and that gave us that 1:3 risk reward ratio trade that we had. And this took quite a long time, but at the end of the day we ended up hitting TP. I see potentially this market extending all the way to this price level, because if you remember the analysis we did from the weekly time frame, that is where we're expecting the market to come into. But at the end of the day, you have a rule, a set rule that you follow, and you need to be disciplined to follow that rule. So my rule is, anytime I get an opportunity, I go for 1:3 risk to reward ratio, and once that hits, I'm off the the trade. So now what can we possibly expect? We now see that another break of structure has happened. Now there is what we call internal structures. If you see clearly here, we do not have any imbalance or whatsoever, but there is another play where how we can catch an entry on this USD CHF to finally go to the upside. We'll have an internal structure here that the market could potentially come into. We'll have our external structures and our internal structures. So So we have an internal structure here that USD CHF could possibly retrace into. Then we'll look for that buying opportunity to the upside, or after a break of structure, usually the market travels to a resistance level, then comes back to fill that level before possibly going up, or it reverses totally from there. So I'm either going to wait for USD CHF to come back into this internal structure, we'll look for that buy, or potentially on the aggressive side of things, I'll wait to see USD CHF come into this resistance, then I'll look for a selling opportunity back into this internal structure, and then possibly a buying opportunity to the upside. So that's basically how we got this beautiful trade on USD CHF. Like, as you can see, this is exactly where we got our entry, and then we targeted this highs here. So I hope you learned one or two things that can actually help you on your trading. Just rewind the video, take your time and go through it again, and if you have any question, don't forget to drop it on the comment section. I will try as much as possible to reply to it. So see you guys on the other